Check, check, 1, 2, check it out. All right, guys, let's go over some things. Since many people can't make it to the lives, I figure we make videos. This is probably going to be better. Let's go look at Apple. Apple, we have here a filled candle, which many of us missed. We had a filled candle right here, which was followed by 2 days of being red. Now, the problem with that is that if you ask me, I think that this is about to find some support at the 20 moving average, which is right here. We found it once. We found it twice, so we might as well find it again here. There's also a line of support. That yellow line that you're looking at is also an area which more than likely you're going to find support at, which is this line right here. This line where we had in the past right here, and if you extended it to the right, then you're going to realize that this is where we are right now, that line can act as a support, and that could be a reason why Apple can continue going up higher. And let's go over some things in regards to Apple, in regards to dark pools. When it comes down to Apple, we are about to slide down in a go zone, and the go zone closes all the way down to 167.40. So the number that I want you guys to look at is 167.40, which would make all the sense in the world if we go to hit it. So 167.40 is going to be right here. Let's put a line through 167.40. I'll put it there, edit properties, and we're going to make it exactly 167.40. It's my belief that if we drop, we're going to be able to find some support. I'll make the green line here. That green line should be the area of support, which would make all the sense in the world, because that means that if we go down here, we're going to get supported at the 40 moving average, which in fact is the support from this trend line coming up from the top, sliding all the way down here. So it would make all the sense in the world. And we have here today in Apple 332 million sold at the price of 171.60, and then another 151 million sold at the price of 171.80. So you want to look at that number, 171.80. I would mark it. I would put an alarm on Apple. I'm going to do just that, right? It's 171.80. Let's set up an alarm to the upside. And I'm also going to set up an alarm at this green line so that it can alert me in case we end up hitting that area, right? So that is it for Apple. Now we're going to go straight into, let's go to Disney. So we're going to go to Disney here on the 1-year chart. This chart doesn't look very bullish at all. As you can see, we have the cross of 20 below 40, and we had this cross back in the 11th of this month. Hence, from there, we had a gap down. It'll be hard to recover from this gap down so far. It is showing us signs of exhaustion. It is showing us that this line right here, the 91.57, is becoming a resistance. And although, you know, you try to have support here, which broke down below it. Right now it's telling you that it broke down below. If you get one more bar below this line, then more than likely the direction is going to be down, and the direction likely is going to be down here at the 82 mark or so. $84 or so was the low. So if it hits that low, if you feel compelled to buy Disney, that would be a good entry. As for right now, the overall momentum seems to the downside, and when you look at a tighter frame and you start looking at 180 days, it looks like we are about to pull back down, usually because we just broke down below this, right? So there's no other evidence of support. Right here would be one, I believe. This would be one, so we could draw that. We bounced there once, so it is possible that we are able to find some support first at around 86.65. We'll set up an alarm there and make decisions if it ever hits that, right? So let's go down to another ticker here, since people are looking at this ticker a lot. So we're going to go to Tesla. Tesla, I had two scenarios for Tesla. I had a video that showed it looked like we were going down. I made that video a couple sessions ago, and I believe when I made that video, Tesla ended up pulling back. I believe it pulled back right here. So it wasn't incorrect. I did tell you that if we go we are sitting at this retracement, and if you go, as you can see, we bounced from the retracement once, we bounced twice, and then we are likely going to go here to this rectangle that I drew there, and I believe that it's going to get rejected at the 200 moving average, which sits right around the $201. My guess is that if the 200 slopes down a bit and we can be there in a couple of sessions, I imagine in a couple for 4 or 5 days or 4 or 5 sessions of trading, we should be up here. And if we can go touch the 199 or so, it'll be around this 200 area, 197, 198. Then I believe at that time it can pull back. Now, there's also the possibility that we're not going to reach it. So there's also that chance that we had an inverted hammer here that would indicate exhaustion, and that this could be a reversal type of pattern, or we get a bullish momentum followed by a shooting star. So if tomorrow is a red day and we can take out the 50 moving average, which sits at around $178.51, then at that time you're going to see the bullish momentum dying off. And where is this going to go? Well, we're going to go down here again to retest the middle of the channel. If you can break below that middle of the channel, then you're going to go retest the low, right? And the low is going to be once you break this area that I have two areas of support. One is right here where you close the gap. So you're going to have this area. I'll draw something here so you can see it, and then I'll erase it. But that's going to be it. There's a gap right there. In fact, we'll leave it so that we get an idea. But you have a gap that has not been fully closed there. So it is likely that at some point we're going to go close that gap. So it's my belief that if we lose some steam now versus if we go touch the 200, at some point we're going to go retest somewhere around this area at the white line. 108 or so is not totally out of the picture. I would say first we go and hit this gap, close it at around 145 or so, and I think a lot of people are going to be buying into that area, which could push the stock to go higher, right? So the next thing to look in Tesla is basically the fact that we are becoming overbought now. So reason why Tesla pushed, and I'll show you, is this trend line right here, that trend line right there. So everybody's looking at trend lines, and if you're not, you should. And when you made a trend line from there to here, and that candle, because it was the candle that got rejected, you should draw a line from here to there. And as you can see, this candle showed you that it broke above the actual downside, right? So once it breaks that downside, it's ready to start taking over and to try to break the 150, which it did, and try to break the 50, which it did. And so this candle, as soon as you break the 50, the next one confirms and it's very bullish. Now you need two candles above the 50 moving average, which you do have. So in case you get a reversal here, as long as you do not cross below the 50, which is at the 178.43 right now, if you don't cross below that, you're going to meet more bullish momentum. If the 20 average, which is this red dash line, crosses the 40 dash line, which is the green dash line, then at that point you're going to get more of a bullish momentum, and then we can definitely go hit up here at the 200 moving average at 201, 202, 200 or so. So what happens if you end up doing one of these, right? Up, and down. More than likely you're going to go hit this line. So if you extend that to the right, you're going to go hit that line, which sits somewhere around the 208, 210, let's call it. And so that is also possible. And at that time, you're going to be hitting the top of the channel. And I believe at that time, it'll be time to retrace, as it is a pattern that Tesla has been doing for quite a while. If you go to the 3-year, you're going to be able to see the whole picture. And it's very clear. It's a wave up, wave down, wave up, wave down, all the way to the bottom of the retracement. It goes to the middle, it dances in the middle around, and it goes and retouches, right? So when you look at a 3-year chart, it's we have not touched the 50 moving average yet, but the 50 moving average is going to be met at exactly that top of a rectangle, and this is why I have the rectangle drawn in there. It's going to be around 208 or so, and that 208 at the 3-year chart meets both the 50 and the top of the regression channel, which my belief that's going to be all she wrote at that time. So that's for Tesla. Let's go over the SPY real fast. We're gonna go over the SPY. So yeah, I have a few lines here. I still believe that there's a chance that we're gonna go and hit the bottom of this with this green rectangle. Is if we ever hit that, I'm going to be buying. If we ever hit it, right? If some people are saying that this is gone and there's no way that we go to touch it, but I believe there's still a chance if the economy continues to show signs of inflation and the Fed continues to rate hikes, then it's probable that the market has made mistakes and has priced in rate cuts. If these rate cuts don't come as predicted, then we're going to be seeing significant pullback, right? So right now what we have, guys, here is on the 3-year chart, as you can see, is this green line. That green line, I think for now is going to be my goal. I think that we can go hit it. As you can see here, we had the green line is born from here as from the 3-year chart, you have here support. And so that line is viable. And then after that, you have an area of resistance right here. Look at this bar right here, bouncing right over it, right here, this bar right here, bouncing over the green line. So that line is in place, is in play. Look, rejection in here, rejection in here. That line must be extended to the right. So there is a chance that we're missing this part right here. It's my guess that we can definitely go and touch this area. We're gonna be looking at somewhere around that area. Somewhere around that area is my belief. So especially because the 430 is an area where there's a lot of resistance. At that time, if we ever reach that area, the 50 moving average should be sloping up and it should be closer to the price action, which should be easier for the stock to actually drop below the 50 and be able to take a dive. But in the meantime, you are looking at something that looks very bullish. You look at the SPY in the 3 years, the 50 moving average just crossed the 40 moving average, which is bullish. You have the 50 moving average kind of flat or sloping upwards, and you have the 200 upwards, which means that medium term, long term, technically on technicals by themselves look bullish, right? So the rest of the picture, you have to look at the RSI and look at other things that you can see that we are overbought. We are in an overbought territory. You're looking at the MACD is getting a little bit weaker. So a few things to look at that you should be considering. But let's go start zooming in on this. We'll look for the 1-year chart. And on the 1-year chart, I'm looking at this yellow line, guys. That yellow line for me is going to be what's going to decide whether or not we should be on calls or on puts. And if you enter on calls, like I did yesterday, I enter mostly based on this green line that you're looking at right there. That green line here basically tells me that we had a rejection here, in here again, in here again, in here again, and that green line has been working as an area of support and resistance. Now that green line is the 41.55 on the futures. Now, I tell you, 41.55 is a line that is being talked about a lot. So if I was you, I'd pay attention to it. On the 41.55, the reason why I entered today is because I'm looking for something like this. I'm looking for a pullback supported by a line that can push on up, maybe for half a day. Even if it's $2, $3, I can make money on it. So it's my belief that since I enter at the green line, it's my belief that if we break below the 50, if we break below this green line, I would be paying attention. If we break below this yellow line, I will be closing my position. I will be probably entering to the other side, because I believe that if we break this accelerated trend line, which is the yellow line, I believe that we're gonna go retouch the 40. If we break the 40, we'll retest the 50. The 50 is this blue line right here. Now the problem with this 50 testing is that if we drop below this yellow line, the MACD will turn red, and then we're gonna get sell signals activated. So at that time, things are gonna be a little bit more bearish. So it is very simple at this time. If you're not on any positions, if you want to short this market, you would wait until we are close to the 50 or cross the 50 and confirm it, and then you're going to have a nice drop from the 50 all the way down to the either 150, which is the green line right here, or the 200 moving average, which is the red line, red solid line, right? So why not just wait and wait for the market to give you confirmation of where it is that we are going. For now, we have a bullish momentum that is trading above the accelerated trend line, which is the yellow line here. We also have the top, which for me is going to be this blue line right there. And first, initially, right? Initially will be that. Now, when are we going to get to the blue line? Well, first you would have to retest this yellow line right here, 418, because 418, as you guys can see here, 418, this is a very important line. That yellow, the orange, this orange line right there. That orange line is acting as a resistance, and it's been a major resistance in the past. Now, you were able to break it, but you did not confirm. You had one and candle above it and then an indecision candle which does not confirm. So what do you have to do to get bullish? You have to get this market to push on back up, stay above the 418.11, get 2, 3, 4 bars above it, and then you're going to see buyers coming in, bullish momentum growing. Where are we going once you break the orange? Very simple, to the top of the blue right here, around 425, 427, which is a number that we've been talking about. If you are able to break that, you start zooming out. You're gonna be looking at my rectangle now, and you're gonna be looking for the 430 or 434 area. You can even reach 435 as the top of the channel on the green, 438, 439 even. That's a crazy thing. So I believe that if we ever get to that area, it'll be towards September, October. At that time, there's going to be a lot of bears jumping in, and I think for sure we will get a nice pullback, and that pullback can drop all the way from 440 down to the 50 moving average, which by that time will probably be around 408, 407, 408, which could be pretty significant, right? If we end up doing something like that and we never break the 50 moving average to the downside, then the market's just going to continue going up, especially if the Fed is going to get behind this move. Whenever the Fed gets behind the move is whenever whenever the market decides to let loose, right? For those that don't know, if you didn't watch my last video, the markets pull back when the Fed cuts. When the Fed cuts rates, if you think the market goes up, you're dead wrong. The market goes up first because it's trying to time it. It's trying to guess what the Fed is going to do. So they take up all the upside. They take it away. They push it now. By the time he goes to cut rates, now it's time to sell. Now it's time to remove all of that. What goes up when the Fed cut rates? The bonds. And you will see it in my video. If you didn't take the time off for it, then why am I making these videos for, right? So unless I love listening to myself. Anyways, all right, let's go over some things here. Let's go over the futures real quick. So the futures, we ended the day right here at 1600 hours, and we've been pushing green up 0.15% for the day. Not for the day, but since we closed, it's been a couple of hours. And I have a few alarms here, of one at 41.70. As you guys can see, there's a line right here, green line 41.55, which is the line that I just showed you on the SPY. There's a line you should be paying attention to. My guess is that we go at night and we push past 41.70. We go probably around the 41.76 area. I imagine by tomorrow, if we're opening the day, we'll probably retest this 41.85 area, which is that light green line that I have. If you end up touching that, we probably pull back from there a little bit, retest, and probably end up going above it if the plan is going to be to go higher. And the next line would be up here again, 4207, which is the line that we talked about that needs to be retested, which would be the orange line when it comes down to the SPY, right? So I think that's pretty clear for now. I think that we have other things that we should be looking at. Mentioned on many reports, we go over XOM. It's going to be one of them. I own it. The reason why I own it, and I did not sell it on the last push, I was up almost $1,000, but as you guys can see on the 3-year chart, it loves to sit above this red line right here that I made. So we are now at the bottom of that trend line. So I believe that if you're not in it, if you want to get into energy right now, there is a chance that if you get into it, not a recommendation to buy or sell anything. This is your choice, your money. You decide. I do whatever I want with my money. You should too. But I believe that might be a chance that this this turns into this. This little consolidation area turns into one of these pushes that ends up going to the top of the channel. Eventually can go touch probably 113 or so around this area, come back down and push again. Rotation right now is into energy as well as petroleum. So you're gonna see it here in the morning. We made the call to buy energy, and here it is, red in the beginning for the first 10-15 minutes, and then a big spike, pull back above the 20. We got 20 above 40, and it's pushing, right? So when you look at the 1-year chart, you look at a nice rebound right here, a nice rebound here again. Of course, for you to get more bullish, you're gonna have to cross the 20 first. First, you gotta cross the 20, then you cross the 40, the 50, and then the 150, and then it goes. So if you set up an alarm around this area, I do have cover calls for June 16 for the price of 110, which I believe is probably not going to get there. And if it does, they can take my shares and I'll reload on the way down on the next time. So I also have Oxy, is another one that I own. Petroleum, it's been consolidating, but it's also when you look at the 3-year chart, it's basically in a very consolidating area. If you made a line through here, you're going to be able to see a little bit of why you should be looking for a trade in this. So if you extend this to the right, you're going to be consolidating in here like this in this channel until probably able to reach that line, which looks like around January or so, with another push up, probably make a new high and push into $78-$80 or so. So for now, that's what we're looking at. If you look at the XLE, which is the energy spider sector, you have a nice trend line up here. Same thing again. You have nice support, 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 and support again. So if you're able to bend those MAs and push to the upside, you're going to be seeing a nice bullish momentum. It can go up to 94 or so and even make a new high, right? So it's something, if you see an opportunity, if you see value on it, I think you can benefit from it if you feel like it. If not, if energy is not for you and you'd rather throw your money at Meta, then you can also do that as well. At the end of the day, it all depends on how you want to make your money, right? So on Meta, since we mentioned it on the 3-year chart, we are getting signs of exhaustion with an inverted hammer here, and we are getting an area that I had marked in there as an area of potential to reach. We are able to reach it, and I think that it's now deciding on whether or not it should break the 150 moving average. So you see it right there. It's trying to think whether or not it should do it. So you are overbought on the 3-year, and I don't even want to tell you about the 1-year. It's more overbought even. So overbought and overbought, and then you're getting signs of exhaustion here, and exhaustion here. And we will see if this is an area where we are going to turn around and cool off a bit. Where can we go? We can go down here back into the rectangle. If we look at option side on Meta, let's look at option side on Meta. I can tell you that is bearish right now. We have 11.79 million in premiums to the downside. We have for 526 puts were sold, 385,000, and there's a lot of calls. It's my guess that they're not going to let you have all those calls. There is one massive put for January 19, 2024 with a strike of 245. So 245, it's right below that for $5 million. Okay, so $5 million. That's going to be a volume of 1.98K with an open interest of 631. You guys can go and look at the options and correlate and make sure that that's still open, but it's my belief that it's still open. There are some calls expiring on 5/26, so this Friday, with a strike of 250. The next one is expiring also on next Friday for the price of 260 if we're able to get there, right? So, all right. So I think, guys, let's go talk about a little bit of things that we do, things that we tend to make mistakes on things. I want to talk about. Let's go to the SPY for a second. Let's go over what to avoid, right? Because this is important, guys. If you're looking at a stock market, you're not looking at the whole picture like this, right? You're looking at this only. So let's try to analyze. Your day opens up. Day opens up. Okay. Let's throw the cloud in there and all that. Let's throw all the noise in there. Let's bring all the tools. Let's bring all the toys to be able to make money, right? So let's throw them in there. Okay. So we are here. You get a buy signal right here. Great. We got a buy signal. And then, hold on, because you guys are not seeing that. There we go. So here. Okay. Now you get a buy signal here. So great. You enter. Then you're getting a second buy signal here, and the cloud turns green. There's your first entry. If you look down below, the stochastics down here told you that down here you look down at the last line, right, all the way down. So stochastics had crossed here, would have told you that there was a change of momentum. You also have here the awesome oscillator changing direction from red to green. Right, red to green, and then you had the MACD cooling off, right, from red to green, and you had the force index telling you that we're getting a push. You got the money flow index moving upwards here, and then you also have the RSI which was oversold at the beginning of the day. Everything is pointing for a push, and there is your push. The next candle, this candle tells you that we switched from red to green. The next candle confirmed it with a blue arrow, right? So you enter there. What is the next thing you should be looking at? You should be looking at the 50 moving average. There's your 50. Hits the 50, gets rejected, gets a selling arrow, comes back down to the cloud, pushes on again, gets rejected at the 50 one more time, right? Zoom in. Guys, look, 50, rejection, rejection, back to the cloud. Tries again, rejection again, back into the cloud, but we're green, right? None of these are changing the cloud. Yes, you have the dots of support down here, which turn now into resistance. So this should be telling you, okay, there might be a change of direction here. There might be a change of direction. I'd have to be alert. Now look, this warned you. This warned you. 1, 2, 3, 4, 5, 6, 7 dots of resistance. Also, that's my orange line that I told you that that's acting as a resistance. Then what happens? Then what do we do? Because the market doesn't want you to know which way we are going, it tricks you into buying and selling and buying and selling. So you're buying here, guys. Don't do this. Don't do this. You buy puts here. It goes here. You're up 50 bucks. You're up here 100 bucks. You're down. You're up here 250, and you hold. And then you're losing. Let's show, oh shit, hold on, let me get on calls. You close it for a loss. You get on calls, and then it does this. And then you're like, shit, I should have kept my puts. Let me get back on puts. You get back on puts, and the next candle is green, and it pushes on up. And this time you're like, no, this time I'm gonna hold. And it goes higher and higher and higher and higher and higher. Then you're like, fuck, okay, you know what? This time I'm gonna go. This time I'm gonna hold. Okay, or this time I'm gonna go on calls, because this time is for sure. Look, we just got dots of support here. This time it's gonna go up now. Then This is when it drops. This is when it drops hard. What happened here that you should not be trading? What happened here, guys, that you should not be trading? 20 is below 40, isn't it? 20 is below 40. So should you be playing this push? No, you shouldn't. Should you be playing it? The question is, should you be playing that push? The answer is no. Why? Because you got 20 below 40, right? That's the king of all indicators. Now, respect it. You have 20 below 40, still, 20 below 40, still. Here never cross, there never cross. And then you get again rejected at the orange line. One more time. What happens now? That's a resistance. 2040 opening up. 2040 opening up. Okay? We're beginning to open up. Then it opens more and more. And although we have these recoveries don't help. Why? Take a look around. Green candle here, right? Green candle. Go all the way down. Is my awesome oscillator green? No, it's red. Is the next one is red-er. This one is green-er. That means it's telling me selling me some smoke. I'm not buying it. Then next time hits again. Now if you look, it continued on the red cloud with one piece of green right here. It continued the red cloud the whole day. When did I get on calls? And why did I get on calls, guys? It's important to know. Look, green line. I said it to you guys. Yeah, this green line, we might get some support, right? Didn't I? I said it. Why? Because I know that green line is there for a reason. I know that green line is for. I know that green line is something important. So then I buy there. Yeah, went up, down, whatever. Made all this noise. I didn't touch it. And then it's moving upwards. What is it doing now? Let's take a look. Futures. Futures. What did it do? A little drop here. A little drop there. The issue is this, guys. If you're going to chase every drop like this, you might as well not play. Don't play. Because if you're going to be chasing this, for example, right now, I tell you, you should not be getting in here. 20 is right together with the 40. You don't know where the heck this is going. This is flat right now. When will I know where this is going to go? Well, if it crosses below the 50 and it hits this 41.61 and it crosses below it, then it tells me that it's breaking below that area that I had as a support, and now it's going to go down lower. Where? At this alarm that I have set, 41.55. Again, 41.55, green line, right? So I want to be able to play those lines. If that crosses below the 41.55, I should be leaving the trade or switching it. In fact, I should be leaving it and then waiting out, make sure that the 41.55 is going to be rejected and it's going to act as a resistance now, and then I can step on the gas. Then you can step on the gas, right? But for now, you cannot. All right, guys, that's about it. I think I think most of you guys continue to make the same mistakes simply because you are chasing fame, you're chasing money. You want to be able to tell your wife, your significant other, listen, I made 7 grand, I made 30 grand. I'm gonna dedicate myself to sitting at home watching looking at my screen and making money. And let's just be realistic. That's not how it works. It's very hard to make money day trading. This is why you'll see my portfolio is very mixed. I have energy, I have options, I nibble here and there. I had a Home Depot. I sold it yesterday. Yeah, a little bit too early, but that's okay. I made 300 bucks on it. Was it a bad trade? No. I made some money on it, so it's fine. I bought Pfizer, and I made another $150. Did I sell it? Yes, I sold it. I sold it. Why? Because I believe that Pfizer is going to now cool off around the 40 area. It's going to pull back, and then when it pulls back a little bit, I'm going to re-enter and probably enter on calls, probably long, buy some leaps or so. So that is the case, guys. If you think that you can just enter a trade and close your eyes and tomorrow you're gonna wake up rich, then good luck with that. It doesn't happen very often. And the guys that have done it have lost it all. They lose it in the next month or so. This is borrowed money they're playing with. So at the end of the day, it ends up pretty much going up in flames. All right, VIX. One last thing before I go. The VIX. If you look at the 1 year chart on the VIX, you're gonna find out that we have been above this yellow line. We've been trading above this yellow line, which is acting as a support, guys. So as a support, right? What happens when the VIX finds support and it crosses this 50 moving average? What happens? That's the 50 moving average. Let's set up some alarms in there. You guys don't have alarms. You don't set up alarms. You don't do trend lines. You just like to click buttons. You need to be able to draw on your damn charts. If not, it's not going to work. Guys, pay attention here. Look, 519. We have a cross in the stochastics. Red line crossed above the purple. This is a stochastics cross. Okay, since then we've had two green bars, 1 and 2. The last one being today tested the 50 moving average. We have not been able to cross the 50 moving average just yet. What happens when we test the 50 and we break above it and we close above it? I'll show you right here. This is your cross above it in a big way, and it goes and it pushes on up and it pushes on up. Okay, so let's pay attention to these things. Okay, let's pay attention. Stochastics have been crossing. Okay, stochastics cross. I know you're not gonna be able to see it because it's kind of caught off in the video now. I just realized. But if you put it in your chart, you'll realize that stochastics cross, and then we are retesting that area. You'd have to be ready for it. All right, that's about it, guys. Let me check if anybody sent anything else, and we will wrap it up. All right, that's about it, guys. All right, see you guys on the next one, and good luck tomorrow. Let's see what we can do.